Hey guys, welcome back to another episode of Market Movers. And today we're going to at least cap off maybe August. So just in case you're wondering, if you're new here, we do this to give you updates. If there is something significant, we try to do it this weekly. Welcome to Market Movers. So today, just to recap about what happened in the PSE, quite eventful week, at least this week. So because we had the last day of rebalancing, we had a rate cut. The Fed in the United States talked about its stance when it comes to cutting rates. And of course, here in the Philippines, we know that the BSP already cut rates. So what does that mean? What is happening in the markets? What can we expect? That's what we're going to be talking about today. Edmund, kamusta?
Doing well. I don't know what the best way to describe today's market, but it's been a bloodbath kahit papano. But nothing really surprising in my opinion. It's more of the same status quo, but we'll talk about it. So if you look at the top headlines for this week, last week we had e-gaming transactions done by 50% since the BSP cut off the e-wallets. Then you had Jackson Hole come in last Friday, and basically U.S. equities continued to rally because of the change in narrative for the first time.
Yeah.
And obviously that led to a dollar weakness across the board, and we will most likely highlight what has rallied since the drop in April. And last but not the least, we'll talk about the BSP cutting interest rates by 25 bips to its lowest point in a while at 5% today. Exciting part.
Yeah,
this social issue didn't work.
Is the Philippines healing?
So what was said was that online gaming transactions were down by 50%. But again, PAGCOR chairman scared everybody by saying, nawawala na sila sa legal websites. Now they're moving illegally. What's your thoughts on it, Pael?
I mean, that's the biggest challenge in that industry, di ba? Na, okay, so it's illegal now. So what are they using at the end of the day? For example, it's like cigarettes. When you ban cigarettes on lumabas. So it's a matter of really watching how the PAGCOR, or at least we regulate this so that hindi siya maging effect talaga sa mga Filipinos. So as long as they're doing this right, I think at the end of the day, sana magbabago talaga sa mga Filipinos.
And this is being talked about, right? Do you ban or do you regulate? And I'm in the camp that you need to regulate. And like what you said, you talk about sin taxes, you talk about tobacco, you talk about alcohol. They have to regulate it, but you can't ban it, because if you ban it, then they turn into the black market.
Yeah.
If you go on and take a look at all the gaming-related stocks, you've seen negative reactions, especially from your gaming stocks. So included here is also Bloomberry. DigiPlus, Bloomberry falling post that announcement. And more importantly, Globe. A week ago or 2 weeks ago, we were talking about, it actually might be a good time to start accumulating Globe.
Yeah.
Because it looks like most of the things are priced in. I think the markets is still waiting for that earnings. I might keep that stance, but I think the markets is just waiting for earnings to come out for third quarter. Then we'll probably see what is a normalized earnings from GCash for the month, for the quarter, for the third quarter of 2025.
I think one of the biggest challenges kay Globe is yung konektadong bill, or at least law, diba? Because this week when you see across the board, you would see mga quote-unquote basura na telcos na lumilipad, right? So do you think that Globe is also affected by that? So you had Plus, you have konektadong bill. So there's so many headwinds, parang pumipigil sa movement ni Globe. So do you think that's also a reason?
I'm not in that camp. I'm in the camp where telco isn't really a sexy business anymore.
Okay.
So a lot of things are moving online to the internet. I think that's also the reason why you've seen Globe and PLDT get out of their tower segment. For those who did not know, Globe and PLDT used to own towers. And basically what they did over the last few years was sell all the towers and lease back against it. And I think that's one part of what people are expecting also for the telco sector. So I don't think it's really a sexy business or an industry, because it's a heavy capex, still a heavy capex, and you're starting from nowhere near the size of Globe and PLDT, and so hard to switch. And the only reason why you'd switch is because you're going to have a cheaper cost. And if it's a cheaper cost, then you're going to have a pricing war.
Yeah.
And that's exactly what's happening on the internet side. So I'm not in that camp where it's actually something sexy. I think the reason why your speculative telcos are going up is just because of some excitement coming from that possibility. But then again, I'm not looking forward to it.
Yeah. Kasi parang that's one of the misconceptions, or at least that's also a narrative out there, diba? Na the reason why you would see these names going down is because of that.
Last Friday, we've had Jackson Hole. And I was very surprised because Jerome Powell has always said we're going to have an independent, we're going to be data dependent. We won't follow what Trump wants us to do. That's the reason why Trump always calls him always late Jay Powell, diba? And the narrative just shifted last Friday. And he said that because of the labor market, which is true, because labor, which we also described last time we were here, was that the number of jobs were derated by an additional 250,000 over the last 2 months. And it's not just the labor market, even some holes in the housing market continue to weaken. And that's what they were pointing out to. And for the first time, they've said, we might actually change the framework. We might not just be data oriented. We might be actually using leading indicators for the first time to make decision making, which is also very dangerous. So I don't know if it's because of political pressure and whatsoever. But with that being said, I think markets rallied because of it, because then everybody's saying, hey, okay, we're going to cut interest rates. Interest rates are finally coming down. Where then you'll start to see more speculation happen in the equity market. That's what happened. If you look at all the past messages for Jackson Hole, I have it here on the right-hand slide. 5 days after, you'll notice that most of the announcements were actually negative post the Jackson Hole. It's just something to keep note of. I don't think it's a concern today because I think the message was clear. We're going to be cutting interest rates. So I think that's what's exciting the market more than anything else. I posted this last time. Will we see a September cut? And it looks like the answer is yes. And so what happened post this, markets rallied once the announcement was made. I think from a market perspective, markets were already pricing in 3 to 4 rate cuts in the next 12 months. I don't think that message has changed, meaning there's really nothing different than what markets already expected in the first place, even though it sounded like a 180-degree change in Powell's narrative. In the market, that expectation was just coming into fruition. I think expect more channels, expect still strength in big tech and in US, and expect more weakness in the dollar. I think that's exactly what happened. And funny enough, we always talk about Liberation Day in April because of the announcement of the big tariff.
Yeah,
right?
the tariff.
Funny part is post that tariff and the weakness in the dollar, emerging market and actually other asset classes, and even the smaller markets, you have here the Russell and you have your EEM, which is emerging market ETFs. They actually rallied more than the S&P. So S&P rallied since that bottom around 24%, RUT 34%, emerging market, especially China, rallied 32% post-Liberation Day. So everybody's saying, tariffs are bad for everybody else. Well,
the market is saying otherwise.
Market is saying otherwise, right? So it could be because they're really trying to slow down also the US economy so that they can bring interest rates. And that's exactly what's happening. I think that's what's being panned out and being played out today. So good part is that's the reason why you've seen alternative assets also. I didn't show here Bitcoin, cryptocurrencies, but they rallied a lot. I think Ethereum more than doubled since the bottom in April. I think you're just starting to see more risk on happen and rotation happen into more risky assets. Funny enough, kasama ba Pilipinas? Hindi.
Bogue.
So what's wrong with the Philippines? I don't have an answer for it. Well, I do have an answer for it, but I'm just not surprised. I just can't say. I'm not surprised. I get the Philippine narrative. It's cheap, but you look at what was the reason why you've seen rotation happen. It's because if you look at the main narrative of the global investment community, it's still AI, tech, and individualism in terms of economy, right? Focus on yourself. And you look at the Philippines itself, the narrative is AI going to destroy or disrupt the number one export of the Philippines, which is human capital? In fact, I'm not in that camp.
You think it's going to accelerate yung productivity ng mga Filipinos?
I 100% believe. And in fact, if you look at some of the headlines that were being posted by Meta and Google, what was being cut out was middle management, not the well, unfortunately, our strongest point is the lower end of the segment, right? Not really the middle management. Look, I really don't know. Do I use AI on a day-to-day basis to increase productivity? The answer is yes. Do I need less people? The answer is also yes. But then again, you still need people. So I think this is what is causing several hesitation for people, especially foreigners, to start entering the market. We've had news last week that, yes, we've had inflow for rebalancing for MSCI, diba? I think that ended last Tuesday. And then people were saying that it was being used as a liquidity day. And what that means is that because people know that they were going to have increased inflows because of MSCI, the foreigners were trying to liquidate that day.
So they're trying to get out of the Philippines.
They think that the AI play is going to affect the BPO and the service sector in the Philippines the most. But I don't know. I hope it doesn't happen. Let me be clear. And I kind of liken it to e-commerce before. Everybody thought the malls were going to die.
Yeah.
because of e-commerce.
That's a good analogy. Tama.
But it didn't happen. Did it improve and increase total retail sales? Yes. Did people move online? The answer is also yes, but not everything moved online. And the malls still today are still one of the
Busiest things in
busiest.
in the Philippines.
More importantly, is BSP cut interest rates by additional 25 bips to 5%. And I put here since 2022, where you've seen the rise in interest rates because of inflation. And we all know that started from the Ukraine supply chain, war, geopolitical risks, et cetera, and the reopening of all economies. Usually, the markets have been pricing it the same way. So meaning benchmark interest rates were sitting at 6.5% at the peak. You'll notice from 2022 and to actually till today, interest rates were in that range over the last 3 years, maybe around 6 to 6.2%. Today, interest rates in the 2-year are still sitting at 5.6. But funnily enough, the BSP actually has cut aggressively, much more than the US and much more than where it came from at 6.5%. So today it's at 5%. They already cut by 1.5%. I'll tell you, the 2-year hasn't moved 1.5% either.
They were parang expected ito. That's why it's not moving that much.
No, I think it's because people are still in that camp of sticky inflation. Where they see that interest rates are coming down, inflation is coming down, but it could be temporary. And because of, well, it could be rice. They always blame rice. They could blame the tariffs. They could blame whatsoever. Inflation could actually rebound in the coming years, and that will actually cause a spike in interest rates. And that's the reason why you're seeing hesitation happen from market expectations. Now, I think this is where the upside is, because I don't think so. And you take a look at inflation expectations. So we talked about being sticky, but inflation today is at 0.9%. So it's actually lower than where we were since the rise. Now, I'm not saying we're going to deflationary, or the point being here is that the US people are still pricing in stagflation, right? Where inflation is still elevated, growth is weak. In the Philippines, I'd actually say we're more disinflation, meaning because we're coming from a high base, it doesn't mean we're in deflationary. It just means that everything is just so expensive, it's not going to go up anymore. That's just it.
It's parang it went back to normal prices, ganun. Or average inflation throughout the years.
Prices. It's not going up. I mean, think of it from this perspective. Jollibee went from 100 to 180 pesos per meal.
Oh.
And think of it from this perspective. This inflation just means it stays at 180.
Yeah, 180. Yeah, there you go.
It doesn't mean it went back down to 140 and normalized. That's not what we're saying. What we're just saying here is that at 180,
it's not going up anymore. Yeah.
We talked about this last time, where I see some asymmetric, like great risk reward, and it's in the bond market. And I continue to believe that this is still the most attractive investment that I see. And that actually panned out pretty well over the last few weeks. Now, if you want something more equity related, look at your REITs. There's a reason why your REITs have been breaking out the last few weeks as well, because if you look at it, interest rates and interest rate expectations are the one that's driving really the share prices of your REITs. I look at this as a good and a bad. The good, yields are coming down, interest rates are coming down. The bad, the economy is slowing down. That's the reason why you're seeing your inflation and your interest rates fall like this. We talked about 2Q earnings last time, and they weren't good. Let me be clear. I think that's the main culprit about why you're seeing this weakness happen in the PSEI.
Yep.
We're not seeing anything systemic, let me be clear. It's just that things are really slowing down. So even at low valuation conditions that we're experiencing today, it can just stay here for long periods of time.
Right. Do you think the BSP will continue to cut this year just in order to stimulate the economy talaga?
Great question. You know, if you look at the message that was being brought out by news releases yesterday, they're saying that there's one last final cut. There's room for one more final cut. And the reason why, it's because they also think that inflation could rebound for 2026. And that's the reason why there is hesitation for BSP to say, hey, we're going to cut interest rates a lot more. Right? Because again, you don't want to spook the foreign currency market also. Because if you cut, look, think of it from this perspective. US is already pricing 3 to 4 rate cuts.
Yeah.
BSP already did 3 cuts, and they're saying they're going to do 1 more. So it's fair, right? You don't want to spook the markets, because if you cut aggressively, then you might spook the dollar currency, the peso. It's very prudent that they play defensive in this approach. The problem is, I don't know if the message is similar to what's going to be actually done. And I think really, because if we're looking at the economy as a whole or corporate earnings, I think things are not as good as what's being pictured from a GDP, from a Philippine perspective. And it's nothing wrong, in my opinion, except that you just have to manage lang your expectations.
Yeah, same. I think it's really a wait and see sa Q3 if we're going to improve because now that inflation is going down. Well, we've talked about this in our podcast, so just in case, guys, you haven't watched that, so check that out. So it's a wait and see. But I think when you check it across the boards and when you're still looking at Philippine equities today, there are you just really need to be selective and set the right expectations when it comes to picking your stock that you're going to hold throughout the next month. So, ikaw, Edmond, maybe what's something that we can expect for the coming days or weeks in our market?
Nothing. I don't know.
Ako din, like it's just a wait and see.
I don't have an answer. Look, this is an investing. We keep on
It's a
reminding
long-
everyone.
yeah.
This is an investing period, and buy yield, buy defensives, buy dividend. I think our message has been clear. That actually has been doing well since the last year. Actually, my expectation is that that will continue. We're just not there yet, where growth is coming back. Corporate earnings, corporate growth is exciting investors. The breadth has changed.
Exactly.
We're not there yet. We're not there yet.
So we need that catalyst. Na aside from interest rates. Yun. Anything else? I think we've covered.
Yeah, I think that's pretty much good for this week.
If you have any questions, guys, about what we've discussed, feel free to comment down. We're reading your comments and we appreciate it. So again, that's it for this week's Market Movers, and we'll see you in the next one.
Hi, guys.